Almost 2 months ago, the S&P 500 reached its highest point ever, confirming that the market has been going strong since it hit the lowest point in late 2022. However, right now it's going through a modest sell-off, which started at the end of March 2024. This is happening because investors are dealing with challenges linked to inflation and interest rates. Looking at the historical patterns, the S&P 500 usually reaches new highs if you wait long enough. Right now, it's back again almost to the highest point. This seems like a regular pullback in a strong market trend and then rising back again. This situation gives investors a chance to buy stocks at the lower prices, especially in popular areas like artificial intelligence, which have been doing really well over the past year. Like Nvidia, Adobe, Apple, Google, Meta, they are having a very strong year for quite some time. Even experts on Wall Street find it difficult to predict which AI stock will do the best in the long run because the industry is changing rapidly. But there is a good news for investors. There is a simple solution for this uncertainty in the market. The solution is exchange traded funds, which are a great option. If you prefer a hands up approach to investing and are interested in safely investing your money into the AI sector, then this video is just what you need. Make sure to watch the video all the way through the end. I'll be discussing two excellent ETFs that can give investors an exposure to the AI boom. Let's get started. Thank you again for joining me today. I am Pankaj. As always, everything shared in this video is for informational purposes only. But if you hit that like button below, that would be a huge contribution in the growth of this channel. ETFs are like big baskets that can hold a lot of different stocks from one sector of the market or replicate the performance of a specific market index like S&P 500. For example, ticker symbol SPY is an ETF based on the S&P 500 index. It is known as SPDR S&P 500 ETF Trust. They are typically managed by a people of experts who adjust the portfolio as necessary, which makes them ideal for passive investors. Since ETFs can hold so many stocks, the failure of one company won't lead to the huge financial losses, which is a great feature when investing in emerging technologies like AI, where there is a lot of volatility. Several ETFs exist today that can give investors exposure to the AI boom. I will be discussing in detail why these two ETFs, Roundhill Generative AI and Technology ETF with ticker symbol CHAT and iShares Expanded Tech Sector ETF with ticker symbol IGM, are great choices for passive investors with a minimal risk. Let's talk about the Roundhill Generative AI and Technology ETF. Generative AI has the potential to make the global economy much more productive. For example, tools like ChatGPT can make text, images, videos, and even write the computer code when you need them. The Roundhill ETF invests in companies developing the infrastructure, platform, and software to bring generative AI to life. This ETF holds 55 different stocks, but it's heavily weighted towards its top 10 positions, which account for almost 52% of the total value of its portfolio. They are heavily loaded with AI stocks like Nvidia, Microsoft, Alphabet, Meta, Adobe, Amazon, Salesforce, and many more. This ETF is heavily weighted towards AI companies, but has some diversification in the communication and consumer cyclical sector as well. Technology weightage is almost 77%, and communication weightage is just 16%. Nvidia is the poster child of AI revolution. It makes the world's most powerful graphic processing chips, or GPUs, that can handle mountains of data to help developers train AI models. The company is currently worth $2.2 trillion, and in the past 12 months alone, its stock price has surged by almost 211%. Microsoft, the biggest company in the world by market value, is integrating AI into all of its products. It is making its own AI model and almost put $10 billion into the OpenAI, the creator of ChatGPT, so that Microsoft can use its technology. Alphabet, another big player in the AI market, is also working on its own AI models called Gemini, which are changing how Google search and other main platforms work. Adobe is using generative AI to enhance its creative software products like Photoshop and Adobe Firefly. Similarly, Salesforce has developed an AI assistant called Einstein to help customers squeeze more value out of its CRM tools. This ETF was established in mid 2023, so it doesn't have a very long track record. It has delivered a gain of 33% in the past 1 year, so it's doing better than the S&P 500 index, which is up 26% in the past 1 year. This ETF is managing almost $142 million assets, and its expense ratio is 0.75%, which is quite expensive compared to other ETFs. Having such a high concentration of AI stocks in this ETF could lead to underperformance if the technology fails to live up to its hype. However, for those seeking some exposure to AI, this ETF would be a great addition to the diversified portfolio. The second ETF I'll be talking about is iShares Expanded Tech Sector ETF with ticker symbol IGM. This iShares ETF has a relatively broad objective to invest in technology and technology related companies that develop everything including hardware, software, and internet marketing. This ETF's portfolio of 2,883 stocks doesn't include only the AI names. Its top 10 holdings account for almost 56% of its total value of the portfolio, and the top 10 holdings include most of the popular AI names like Apple, Microsoft, Nvidia, Meta, Alphabet, Broadcom, Salesforce, Netflix, AMD, and many more. As said earlier, this ETF is heavily weighted towards AI companies but has some diversification in the communication sector as well. Technology weightage is almost 77%, and communication sector weightage is just 22%. Apple is not much open about its AI initiative like other tech giants, but it could become one of the most important companies in the industry. Its iPhone 15 Pro is fitted with an Apple designed A17 Pro chip, which the company says is capable of processing AI workloads on the device. Despite sitting at the top of the above table, Apple isn't the iShares ETF's largest holding. That title goes to Alphabet when we include both Class A and Class C shares. Combined together, Alphabet holds almost 11% of the weightage in this portfolio. As talked earlier, Alphabet's powerful Gemini models are bringing generative AI to Google search, but they are also available to create content across popular products like Google Docs and Gmail. Outside of its top 10, the ETF owns a number of other important AI stocks like Micron Technology, which makes memory and storage chips, which is crucial for AI workloads. The CrowdStrike, which is a leader in AI powered cybersecurity software. This ETF is managing almost $4.3 billion assets, and its expense ratio is 0.41%, which is quite moderate. The ETF was established in 2001, so it has a long track record to give investors some confidence. It has generated a return of more than 800% since its inception and almost 50% in the past 1 year alone, thanks to the proliferation of technologies like software, cloud computing, and AI. Assuming AI lives up to its hype, there is a good chance that these returns will continue for the foreseeable future. As a final conclusion, looking at the recent market pullback and followed by surge again today, it seems there is a lot of volatility on the market. Also, looking at the promising outlook of artificial intelligence stocks, investors may find exchange traded funds an attractive option for accessing this AI sector. Two notable ETFs, Roundhill Generative AI and Technology ETF and iShares Expanded Tech Sector ETF, offer diversified exposure to AI companies, which is mitigating the risk associated with the individual stock pick. Write down in the comment section if you got something out of value in this analysis. Also, if you found this information valuable, don't forget to like, share, and subscribe for more financial insights. Until next time, happy investing.